Have you ever wondered how the richest people in the world pay less taxes than you? Like, how is it that Jeff Bezos, Elon Musk, or Warren Buffett can be worth hundreds of billions and sometimes pay zero in income tax? Well, the crazy part is, it's 100% legal. Today, we're breaking down exactly how the ultra rich avoid taxes legally. And no, it's not by hiding money under the mattress. They don't earn money the way you think. First, let's get this straight. Most rich people don't earn money like the average person. You work a job, get a salary, get taxed. Simple, brutal. But wealthy people, they don't rely on salaries. Instead, they build assets, stocks, real estate, companies. And when those assets increase in value, it's called unrealized gains. So your net worth could go from $10 million to $50 million, and you wouldn't owe a dime in income taxes until you sell. Borrowing against wealth. Now here's the magic trick, the borrow strategy. Let's say a billionaire wants to buy a mansion, a yacht, or even fund a company. But they don't want to sell their stocks and pay taxes. So what do? They go to the bank and say, "Hey, I have $100 million in assets. Let me borrow $10 million against it." The bank happily says yes. Why? Because those assets are collateral. Now here's the kicker. Loans aren't income. Loans aren't taxed. Real estate tax benefits. Now let's talk real estate, a tax playground for the rich. Let's say you buy a building. You make rent money from tenants. That's income. Taxable, right? But here's the loophole. Depreciation. The government lets you write off part of the building's value every year as if it's wearing out, even if your property is actually going up in value. That means your rental income can look way smaller on paper, sometimes even negative. So you collect rent, the property appreciates, and your taxes stay low. Oh, and do it. And don't forget mortgage interest and repairs. Those are tax deductible too. Capital gains versus income tax. Here's another trick. The rich pay taxes at lower rates than average people. How? Because of capital gains. If you work a regular job, you might pay up to 30 to 40% in taxes. But if you sell a stock you held for over a year, that's a long-term capital gain. Tax rate? Usually 15 to 20%, sometimes less. So just by making money through investments instead of a salary, the rich pay less tax per dollar. Trusts, foundations, and charities. Now let's get fancy. Want to protect your wealth, lower taxes, and still look generous? Say hello to trusts, foundations, and donor-advised funds. Let's say you donate $10 million to a foundation that you control. You get a massive tax deduction today, and the money stays in the foundation, where you decide how it's used forever. You can even pay yourself a salary to manage it. It's philanthropy with perks. The final trick, die rich, pay nothing. Remember buy, borrow, die? Here's why it's powerful. When you die, your heirs inherit your assets, but the tax resets. It's called the step up in basis. If you bought stock at $1 and it's worth $100 when you die, your heirs inherit it at $100, not $1. So, yes, the ultra-wealthy avoid taxes legally. So the next time someone says the rich don't pay their fair share, they might be right. Like and subscribe for more financial truths they don't teach you in school.